Yo, good morning, traders. Welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, with another fantastic episode for you guys. I'm going to set you guys up with some trade setups, some fundamentals on what's driving markets, and everything else in between. Now, usually on these episodes of Market in the Morning on Tuesdays, we have one of our co-founders in the lab with us. He's not with us today, he's under the weather, so definitely drop a like to show him some love. Make sure you drop a comment too to tell him, hope you feel better. All right, guys, let's pull up some charts and really see what's driving markets today. So the first thing we're going to do is we are going to cover gold. A lot of people in this channel, yes, sir, what's going on, John? A lot of people in this channel are very curious about what's really driving gold. Gold is a very heavily traded commodity across Forex, across futures, even across options and stocks, right? Gold is up over 50% year to date. Well, what's driving it right now? Good morning, guys. Good morning, everybody. Drop a good morning in the chat if you're ready, and hit that like button if you're ready to make some money today. I know I am. Definitely a strong day yesterday. I don't know about you guys, but we caught some nice moves on gold and the S&P yesterday in my community, and now we are looking for continuation. Yes, sir. All right, guys. So first thing we're going to look at gold. We're going to hit this little brain icon, and it's going to give us a little bit of a rundown. So gold futures traded around 41.63 on November 25th after a modest intraday decline. Just a very modest decline yesterday. Not too bad. It was really more of an increase. So we're going to skip that for now because I do see it's a little choppy up here, but the best part about market is it's not just one piece to the puzzle. We've got so many different tools that we can use. What is impacting gold on the intraday? Gold remains in a bullish intraday trend supported by renewed dovish Fed commentary. Guys, this is huge. So the Fed commentary, we're going to go over to our Fed Watch tool, and we're going to see. Now, every morning we should be checking this, especially in this current market conditions, because this is really helping us drive the market too. So our current Fed rate decision percentage or odds for a December rate cut is sitting at 84%. Now, if we go to compare, we can see at some point it dropped as low as 50%. It was even lower than that at some point, as low as 28%. That's when the markets were seeing that real strong bearish move, almost like a reversal to the downside. But now it looks like the Fed's starting to flip again. We might get that rate cut. Odds are looking even higher. Well, now we're leaning more bullish again on the market. So Fed policy is our number one market mover today. That is our Fed officials, including Moran, reiterate calls for rate cuts, citing rising unemployment, which is huge, guys. Now, we had non-farm payroll last week that came with 120,000 plus jobs added, but unemployment still ticked up to 4.4%. Major increase. It's the highest of unemployment since 2021. Reinforcing market expectations for a December rate cut. That's what all that information tells us. And you guys can get that information is all right here on market. That's why it's called the Market Research Knowledge Terminal, MRKT. Come over to our economic. We want to look at last week. Let's see, at the month. Now, non-farm payroll was last week, which is going to be the 20th over here. Non-farm payroll, 119,000 added. Forecast was 50K. But the impact is what's really important too. Now, we also had some news this morning that I want to check out, and that was retail sales, and I believe PPI also came out today. Here we go. So here's our PPI year over year. Looks like it's up 2.9%. The impact it should have, higher than forecast. So where are we? We're higher than forecast. Should have a bearish reaction on equities and gold. Very important, guys. Remember that. Now, what's cool too is we could hit report summary, and what usually pops up over here is a generate report, and it pulls the report straight from the source, and it tells you exactly what's going on and how, and it more broken down in detail. Now, the other one we have is retail sales month over month. This one came in less than expected. So forecast was 0.40%, came in at 0.20%. We see we're pretty sideways on retail sales. So this isn't something I would take into a lot of consideration, but I still will look at it, right? So actuals 0.20%, that's lower than forecast. That would have an inverse reaction. So we saw PPI was higher than forecast. It should have a bearish reaction, whereas our monthly, retail sales is lower than expected, should have a bullish reaction. This tells me we might be in a little bit of a range-bound price action today, right? So we'll be patient. We know that the Fed holds a big percentage of direction on the market today too. So those are all things we're going to be aware of. Let's put gold back up on here for just one moment. And I just want to see US data, ADP private payrolls, that's the one we were speaking about before. Would love to see gold above 4140/60. Yeah, we'll get in some technical analysis as well, guys. We're going to find some key levels and some great trade setups that I know I'm going to be looking for live too. Some geopolitical risk, nothing too major going on with gold. Very important, guys. You always want to come over to the live news tab when you're using market and come over to high impact. And guys, if you don't have market yet, they're running a Black Friday sale for 25% off the annual. Best sale you could get, brings it down to a very cheap price for a monthly standpoint, but definitely look into that. Check it out, MRKT.ai, and that is the Black Friday sale. So let's see, US September PPI for final demand, X Foods. Let's see, above, we knew that was above expected because we saw that on market. Anything else relative to what's going on right now? US private employers shed an average of 13,000 jobs during the 4 weeks ending November 8th. Okay, good to know. Again, just sort of looking over jobs, looking over any big headlines. Now, something we might also look for is going to be something possibly Trump related, because we know when Trump wants to speak or tweet, it has a major impact on the market. So we're going to look up Trump. We're going to hit the high impact tab because we don't really want to see all. If we look through all, we're going to be here for quite some time and really be chewing at time that we need. And that's where market will sort of highlight that for us and say, okay, let's get rid of some of these unimportant ones and let's see what's really going on. So we have some Russia talks, US and peace talks. That's good to be aware of as well, because peace talks can be bearish on something like gold. Gold does well in times of uncertainty. Well, if there's peace talks of Ukraine and Russia, and there's also positive talks of China and the US. Now look at this. US president proposed phone call with Takashi. Let's see, president signs order to boost AI accelerated. Let's see, Trump signs executive order related to AI research. And now before I did see he also spoke to China recently. Very important. XI tells Trump return of Taiwan to China, an important part of post-war international order. Ooh, that's huge, guys, because as I'm sure most of you know, Taiwan being its own country, China wants to sort of take it back. So now we could go down and see what's going on in markets, general markets. And we see on our general markets, where'd we go? 68%. So we do have active buying. We can take a look at the S&P, but first, let's do some technical analysis on gold, guys. So the first thing I always want to do is I want to start on that daily time frame, get a bit of an idea of direction, right? Are we bullish? Are we bearish? Now, when we're in a daily time frame and we see price action like this, where our recent price action is sideways, that's when we look to trade the range. Sort of sell the highs, buy the lows, just sort of trade within that range and not have a big expectation of the market. But now that we see we're starting to find a little bit of a higher low formed, check this out, guys. So we pulled back on gold. So we had higher highs. Guys, let me know if you want me to turn off the background music. Let me know if you want me to keep it on. This is the first show that we do have it playing. I was curious if you guys wanted that or not. So we had higher highs. We pulled back, and we pulled back about, I want to say, let's see, 11% on gold to the downside. 11% from its all-time highs. But remember, when in doubt, we want to zoom out. Year-to-date, gold is still extremely bullish. Look at this, guys. December, here's November. This is the beginning of this year. We were up as high as 60% on gold. This is a massive move. So when we pulled back 11%, we were still up over 40% year to date. So for a lot of people that were going, oh, we're bearish now on gold, that's not necessarily true. We want to watch for markets to form and give us an idea. Pullbacks are healthy in markets. We do not want to see markets shoot straight up. That's a little bit of a red flag. So when we see markets sort of settle and react to different catalysts like those Fed rate cut decisions, well, that gives us some momentum and some clarity. So something I'd look for on gold now, music is good, awesome, man. Something I look for now is gold breaking previous day highs or previous day lows. So I see that yesterday, Monday, we broke Friday's high and we closed green. Now I also noticed today's Tuesday, we've already broken that previous day high. So for us to close green today, that would require us to close above our open price on our intraday. So because I found my daily time frame price levels, now we could go down to a smaller time frame and see if I have any maybe demand zones below our open. Because if I could get a long entry below our open price, and I'm expecting price to continue higher on gold, that's going to be essentially buying the dip. And that's our goal as a trader, guys. Buy that dip, Don't buy the breakout. So let's break it down. We'll go to a 4-hour time frame, see what's cooking. Something I did want to mention is we did have some resistance here on gold, and this was an area that worked real well as resistance multiple times. So there's resistance here, this is around 41.50, and now when we were above it on a Thursday, November 13th, we held it as support. So now that we're back below it and we're testing it, I would want to see it work as resistance until we break it. Now, if we can get a strong break above it, something I would also like to see is look at how the 4-hour time frame is forming right now. So this is our last 4-hour candle on gold. What this is, yeah, turn off. All right, we'll turn it off for now. I know it sounds a little loud. We'll turn it down. We'll turn it down, see how that's going. So daily time frame, we have, this is what I would a 4-hour time frame. This is what I would consider a demand zone, right? Or a basing candle, B-A-S-I-N-G, basing. What that means basically is at some point on this drop, we see that there were sellers active in the gold markets. People were selling all the way at 41.06, all the way at these lows of this candle. Those are the people that are going to be trapped in the market. Have we a strong move to the opposite direction? Now, we already have that strong move forming, and because this analysis is on a 4-hour time frame, what I usually look for is continuation. So I'd look for this 4-hour that we're on right now that closes at 10 a.m. Eastern. I'm looking for this to close somewhere in this blue zone. If this can close within this blue zone, so 10 a.m., we're closing above 41.45. I want to see that 10 a.m. till even 2 p.m., which is a 4-hour period, continues to the buy side on gold. Now, what we can also do is we can usually find some good key levels on gold as well. It has 41.85 on market. And guys, look at that 41.85. We're going to mark that out. Where's my favorites? There we are. 41.85, that's right near my other key level that I personally had marked out for my own technical analysis, 41.75. So now I have multiple confluences coming to this upside target, plus a higher time frame that's also lining up to push towards that target. So now, again, as a day trader, I'm trying to break down that time frame to find the best possible entry so I can have the best looking risk to reward trade, so that if it's a loss, I'm able to either A, re-enter, or B, take the small loss and look for a new trade setup. Yeah, corner of wealth, you're absolutely right on that. Let me just set this up as a market level. But very important, guys, when you're trading, market is the best tool to have intraday. Like right before you're about to get in, you're doing some pre-market analysis, you're finding your levels, you're finding your bias. But when you're live trading, it's so important to come over to the live news tab and just make sure to sort of keep this up. And what's great too is they just added live audio feed and high impact alert. I definitely recommend to click on that high impact alert. That way it'll make that little beep you just heard. Ready? I'll be quiet for a second so you could hear it. That noise. So right now, me personally, I have 4 monitors. So when I'm trading on here, I have market on my left side. So if I'm not looking at it closely and I hear that alert, guess what? Market just told me we have a hot headline. Maybe be careful with the trade. I could look over, see what the headline is, if it's something possibly Trump related or Fed related, almost like an inverse reaction. Let's say Powell comes out and says, no, I'm still sticking steady, we're not cutting rates. Markets are going to drop so fast. That is something to keep an eye on, right? So because of that, we could use market to keep an eye on for us. We don't have to be sitting on Twitter. We don't have to keep CNBC playing on in the background, which also won't tell us a big headline. Market is the way to go, guys. That is how we can get through, making sure that we're not getting sidestruck by a big headline that we could easily see. Something I wanted to mention too, guys, because the government picked back up, we have our COT report back up and running. So let's take a quick look at our COT report and see where these heavy institutions are positioned. So as you see, our last COT report is from October 7th. Oh no, so it is still a little old. October 7th. For that, September 30th. Okay, so our most updated one is that October 7th. We could take a quick look to see our metals at least, just to make sure gold is still steady on that 81% bullish, shorts only 18%. Hey, appreciate you, Eric. Absolutely, man. Always a pleasure doing these shows with you guys. Great to find some levels, some analysis, and find some trade setups. So let's go back to gold on the technicals and see if we could find an entry today, guys. So if I'm looking for the 4-hour to continue here, we already broke previous day high. Let's start to break it down a little lower. 2 hour, we have a little bit of an order block here, right? Now, I'm sure most of you know an order block is where we have our basing, we have our strong move away, and sometimes it will come, retest, and hold. So that's why I'll mark out an order block if I know a demand zone is forming. Hourly, okay, here we go. Now I see it on the hourly too, but this is a massive zone. I'm not going to look to take a trade on gold and have a 20-point stop loss. That is wild. We would never want to do that. So what we might do is we can maybe look to move our stop loss a little above the zone because we want to look that we create higher lows. So we're looking for higher lows, higher lows, higher lows, higher lows. So we'd look for another higher low over here. We should not break this price level. Or what we can do is, again, look a little lower on the time frame and just see if we have anything lining up. We have a 15-minute fair value gap right here, but something to mention of this fair value gap is we've traded in this price range for a long time already. So it's not going to be a low volume shelf. And when we look for volume and fair value gaps, that's when we look for those low volume shelves. This one will not have it. So ideally, I am still looking to see if we could get a retest of that 1 hour order block. Going to have my entry somewhere over here, and we can even see 5 minute, see if a 5 minute lines up. Look at this, a 5 minute gap and go right here. Now basically what that means, since gap and go, whatever you want to call it, it's a fair value gap, right? So we had green, 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 all these green candles moving higher, but look at the space in between candles, 7:55, 8 o'clock, 8:55. We had a strong move higher from 7:55 to 8:05, and in between, we created this little imbalance right here from candle close of 8 to candle open of 8:05. That little imbalance adds a little confluence to that low volume imbalance that I mentioned before. So this is really lining up, guys, to say, hey, listen, this area, if gold could pull back here and we're looking to just trade the range on gold, this could be a great spot for some long positions. So guys, possible longs on gold today. That is, of course, with the momentum we're trying to see off of the Fed policy shifts. So we know that Fed officials are looking more for rate cuts now, and everything else in between, of course, the technicals, US data. We do want to be a little careful, guys, because Thanksgiving is this Thursday. US markets are closed Thursday, and it's a half day Friday, which means the New York markets, or US markets, I should say, close at 1 p.m. Eastern on Friday. So we do want to just be aware of that. And most likely, too, guys, we have to think of it from a different perspective. If I'm an institutional trader, if I'm a hedge fund manager, and it's the holidays, I'm probably going to be traveling or taking some time off, right? And usually people that are higher up, they're not traveling the same day of the holiday. They're going to be traveling the day prior, even the weekend before. So technically, what we see in the past historically is the week of Thanksgiving tends to be one of the lower volume traded weeks of the year. With that being said, we do have to take that into mind that it does have lower volume, so that can also lead to very range-bound price action. So that 4 hour is very important to me to see how we close. If we can close somewhere in that blue zone on the 4 hour, great. So ideally, I would like to see us dip back in for an entry between now, which is 8:50 a.m. Eastern, and about 9:30, right? So if we could get a dip and an entry between now and about 9:30 and markets start moving back higher, so ideally what that would look like is it would look like we're all the way up here now. I'd want to see price move lower, which would create a long upper wick, and then I'd want my entry, and I'd look for a long position, and I'd look for us again on this 4 hour to close in the blue. So I want to see if we could pull back within the next 30 to 45 minutes. We have an hour 10 left, and then continue in the last half hour of that 4 hour candle, because that will be sort of like us taking one last stab at the shorts, trapping some potential sellers, and then reversing for continuation, because we do see gold is definitely trying its best to move higher. Supply zone wise, I don't even really see that many supply zones. So what I'm going to do too is I'm going to bring the opacity, which would almost be the transparency of this zone down, because it's not even a real resistance area. It's just a point that was resistance and was support. So what I call that is an area of interest, AOI. So I have a few zones that you see on my chart. Any of the green zones are demand zones. The red zones are supply zones, and then any blue zone is an area of interest, sort of like a point of control, but not based off of volume. It's an area of interest. It's an area that worked historically as a support or resistance. You could drag it out again, and we see same situation, more examples of holding as support or resistance. And we see this orange level I have, 41.75, lines up with that market level, 41.85. That would be my price target. That's a very strong key level. My next supply zone I have is until the upside of 42.20. So if we're finding some long positions today, if I'm looking for this 4-hour to continue, we might get a rally here, and then we might get continuation there too. So that's something I'm looking for. I want to be careful. I want to be aware. And we want to be long on gold if we can stay bullish. Guys, drop a like, drop a comment. Tell me what you're watching today and if you're bullish or bearish. And do you agree? Let's see. So let's get our drawings back up there too. Now, ideally, again, because I'm looking for the 4-hour to continue, we might not get that pullback all the way to that 41.30. If we don't get the pullback to 41.30, then I'm going to be looking for a different trade setup. Now, because this blue area right here, we know we just went over multiple times, was a support or resistance, something I'll look for today, if I'm looking for the 4-hour to continue, is I'll look for us to break higher, right, and even close or go somewhere up here, and then pull back somewhere in this blue zone, and use the zone as, instead of resistance, which it just was recently, as support. And that's going to be trade setup number 2. So now we're coming up with multiple trade setups. They're sort of if this then this scenarios, right? When we create trade setups in the morning, we want to be prepared for the market to do almost anything. If we move higher from here and continue and don't pull back, where's my entry? If we do pull back, where's my entry? If this 4-hour completely fails and we move lower, what am I looking to do? What am I looking to trade? Well, if that's the case, let's say we do completely fail at this point. If we start taking out the low of 41.12, then I'm going to look for us to start taking out some more lows, the other 41.06, and then even make our way down to the next demand zone of 40.96. So I have bullish targets, I have bearish targets, I have my bias currently is bullish, but I'm not married to my bias that I'm going to say, oh, well, we're breaking lower, I still have to try to go long. This is just a fake out, I should go long still. No, I'm prepared for the market to do anything, and I'm prepared for technicals to do anything. And with market, MRKT, I'm ready for the news to drop anything. Yes, sir. Yes, sir. Appreciate you, man. Absolutely, guys. Got to have the right mindset for trading all the time. And got to know what space we're in the markets, right? All right, let's see. Guys, obviously, because this week is Thanksgiving, we will not have our Thursday show. Possibly move it to Friday. We might just skip it this week. So definitely run that like button up. Share this post to your stories, share it to your friends. Great free show for you guys to go over some technicals, some fundamentals, and everything in between. Guys, let's cover the S&P 500. This is a major index. A lot of people trade. Can we look for the next 30 minutes buy after bottom wick? Yeah, so exactly. Skip pull. It's got a great point. Sort of an ideal situation for gold, right? Would be if we can pull back in the next 30 minutes and find some support somewhere, can we buy that dip and head back higher? Yo, market never sleeps, man. Market will still be open Thursday. MRKT will still be open Thursday, but the show might not be. Yes, let's take a look at the S&P 500. Now on the S&P 500, we came up into, this was an old support. I was waiting for us to pull back into it yesterday. I'm not going to pull up my Twitter now because it's going to take too much time, but you guys could follow me at Trade with Kev. I posted a screenshot of this 30-minute chart right here when we were on this red candle, and I said I'd like to see us hold above this red zone. So same situation, this is a supply zone. It held as resistance. We broke it. It held as support. Wanted us to hold that zone. We did, and make our way to 6,700, which was a key psychological level. We blew right through it. 6,720, that was old support, now resistance. It needed to be retested because we broke through it very quickly. Now at this point, markets, in my opinion, on ES could sort of go one of two ways, but with that Fed rate decision, that Fed rate shift, it still is more leaning bullish. So something I might look for on the ES is going to be if we can start to squeeze through this level. So same setup on gold, where right now this green zone is resistance. I don't want to make it red because the red zones are my supply zones, the green zones are my demand. So even if we're below it, I'll know psychologically, and because I'll remember how I chart my charts, that this was a broken demand zone. That way I don't try to short it, because even though, yeah, it's working for shorts right now, we held it yesterday as resistance. Usually the following day I have it deleted by now. So at this point, I would like to see markets blow through it and create that low volume shelf somewhere overlapping that key area. And once we can get that, that's when I will look for my long position on a retest of that zone and look to target the next supply. Now we can use market as well, find some key levels. 67.28. We're right near the key level right now, so market's pretty range bound on ES, and I do suppose that is because of the holidays coming up. So again, low volume. We might stay range bound today. Something to keep an eye on, whether you trade ES, GJ, GC, NQ, is volume. No matter what you watch, stocks, futures, forex, volume is so important. If volume starts to fail and we're moving in a direction, you got to be careful that it's not a fake out, right? Right now, we see on the ES there has been no continuation. So anybody that's trying a short position down here will most likely get stopped out. Anybody trying a long position down here is trying to buy the lows and will also most likely get stopped out. So we want to wait. S&P 500, we're going to be patient. It is 856 right now. We also want to look at the NASDAQ. A lot more people look at NQ, so we could take a look at NASDAQ. Would be the, what is that, US 100? So same thing with the NASDAQ. NASDAQ drops almost 10% from its all-time highs, very close to a bear market. So a bear market is considered 10%, correction is considered 20%. I believe correction or crash is 20%. 10% is the correction. So we almost hit a correction phase on the NASDAQ. We have then since pulled back. We can mark out our previous day high. Now our previous day low is all the way down here. I'll mark it out anyways in case we do start to fail. But I don't think we can make our way all the way 500 points lower to our previous day low. I do think we're better off trying to trade it back towards that previous day high, especially with the shift in the Fed rate decision. Again, that's what caused the reversal Friday. Friday is when we had a lot of the Fed speakers speak, sort of change their direction, change their pivot from hawkish to dovish. We know that when they're dovish, they're looking for more rate cuts, and that's what gave us this quick reversal off of that 9% to the downside. So at this point, I'm looking for momentum. I'm looking for a breakout. I do want to be careful. The NASDAQ right here, bit of a rock and a hard place. So we have some order blocks that formed. There's a bit of an order block right here, an order block right here. And we see that when we form them, we push higher, we test, we push higher. So now what we're doing is we're testing this other one. We would want to see if buyers can hold us here to move higher, right? Can buyers continue higher on NASDAQ here to the next resistance point? Next resistance point I have on NQ is going to be not too far, right at 25,048, 25,048. So if we held this area right here, or we wanted to use that 1 hour order block as our entry, it would still be a good 158 point move. That is, how many ticks is that? 158 times 4. You guys could do the math on that. Is that like 600 ticks? Let's see. Now, we would want to start to see us close back above this. We did already. So check that out. 5-minute time frame. We pulled into this zone. We closed green back out of it with some extra volume picking back up. This could be our retest, a higher low. We'd possibly look for a long entry here on NQ. Stop right there at that low. I actually want to check that out myself. Give me 1 second. Let's see, guys. Do we have a trade set up on NASDAQ? Good morning, everybody. Guys, drop a like, drop a comment. Tell me what you're trading today. Tell me what you are trading today. We could take a look at equities too. We do want to make sure that indices, AI companies are all performing well. I'm just trying to see this setup for NASDAQ here. I really am curious about these longs here on NQ. The only reason I wouldn't take this trade right now is because it is still pre-market, and I'm not a big fan of trading pre-market. However, I wanted to see this hourly continue higher, but it's only got 7 seconds left. But this could be a possible trade setup. Very tight stop loss on this trade. This would be a 7-point stop loss on NASDAQ, guys. That is huge. Wild. Even if we don't go all the way up there, we want to just go to new high a day. Trade the range, right? Looking for a $150 risk to make $2,500. 12 to 1 risk to reward right there. I might take that just to see about that light risk. Again, I'm not a big fan of pre-market trades. Usually want to see how we're holding up first. Want to see VIX is moving lower. VIX below 20 would be a great sign too. And if I do miss this trade, we can always look for the next, right? We could always look for a re-entry. Look at that. NAS is trying to hold off that 24,881. Gold also trying to move higher, but really struggling. I would not look to go long on gold, guys, in the current area that we're in right now, because at this point, we're definitely in a range. It's not debatable that we're in a range on gold right now. We've rejected this high multiple times. 1, 2, 3, 4. This could be 5. So instead of trying to buy the highs up here, let's wait till we break out and these highs become our new lows. NAS is starting to pull back here. I don't know if I want to take it. Let's see. We could take a look. It's like it definitely looks okay here off that 1 hour, but because this other 1 hour just closed bearish, that's why I'm staying out of it. But if this 1 hour was green, I'd be very interested in these longs. Alright guys, gold. Again, very difficult point. Looking for a breakout with momentum above this area. And on the breakout of that area, we're going to take our retest and go long. Yeah, man, gotta join Market, Capital Hungry, all that, man. All that. Follow us on social media, guys, at Market_AI on Instagram and Twitter. You guys can follow me on Instagram as well at Trading with Kev. Follow Capital Hungry on social media. That is Jeev. Great guy, great analysis, awesome dude, and one of the co-founders of Market AI. So really, really awesome. Yes, I'm not a fan of those pre-market trades on NASDAQ or ES. I will take pre-market trades on gold if it's given me the right opportunity. Right now, there is no good opportunity here on gold. I am a bit more concerned that, hey, it's Tuesday. In 2 days, we have Thanksgiving. Maybe some big institutions, some big traders, big volume is taking today off to prepare or to travel. Right? So because of that possible lack of volume, I don't want to force anything. I don't want to try to go long here just to get stopped out down here and then feel the need to chase it once we reverse again. I don't want to go short here thinking that we're in resistance again just for it to squeeze higher. We want to be patient traders and we want to react. We don't want to predict. That's our goal. So guys, it's some trade setups on the S&P 500. NASDAQ, we see it is trying to break that low. It did break that low that we were looking at. Now, ideally, for us to stay on a bullish bias on NQ, we'd have to stay above 24,844. So something I like to do, again, we're moving back lower at this point. I want to check my higher time frame, my 15-minute, my 30-minute. Are we creating any candles that are suggesting stronger moves to the downside on our higher time frame? Because a lot of people get too stuck on the 5-minute and think, oh, well, the 5-minute's going to hold, and they keep buying and buying. Meanwhile, if they just zoomed out a little bit, they would see markets are starting to shift. So we see here 15-minute order block to the downside, bearish order block. And we see we also created another one right here. So now, again, I'm sort of shifting that bias on the S&P and the NASDAQ. This is the NASDAQ now. To say, hey, listen, if this 15-minute wants to close or wants to at least break this price level and then close bearish, I'm going to look for the next 15-minute candle to retest this 15-minute order block right here, take it short, and I'm going to look for us to start breaking lower. Or even head towards, we have a demand zone on the 15-minute time frame right here. Let's head towards this demand zone. And we're also going to delete this broken supply because we have used it as support already. And I do have a new support zone over there as well. Sounds like we're getting some headlines, guys. Let's see what's going on. Oil prices fall amid Ukraine peace deal. Company denies earlier statement. That one's not too important to us, but oil, if you guys want to take a look at oil, we most definitely can. This is what I'm going to be looking for on the NASDAQ today, guys. So we got some long position setups. We got some short position setups. We've got some NASDAQ positions, trades. We got some gold trades. Guys, we are setting you guys up today, so make sure you're hitting that like and subscribe. Absolutely wonderful episode today. Something important too, guys, to look for is the VIX. When you're trading the S&P and the NASDAQ, you want to be trading and looking at the VIX. You don't necessarily trade the VIX, but you look for it to inverse the S&P and NQ. When VIX moves higher, markets are selling, and markets should be looking for volatility to pick up, and that would be selling pressure. When VIX moves lower, that would mean more of a stronger S&P and NASDAQ. So, and on the flip side of that, guys, right? So we have a confluence with the S&P and the VIX. With the NASDAQ, with gold, what we look for is we look for the dollar. Take a look at the dollar here. Dollar on the daily time frame. Dollar's taking a massive hit right now. That's going to really help support us for longs on gold. So first, I just wanted to point out, dollar has been flipping to a more bullish sentiment ever since about September 17th is when we made our last low. Since then, we made some higher lows forming around October 6th. That's when Powell sort of started to shift that sentiment. And we made higher high, higher high, higher low, and more recently, another higher low right here. Let's see. Check this out. So a higher low, higher low, higher low. This would be still a bullish sentiment. So even though we're selling off today, it would still be a bit more of a bullish sentiment on the dollar overall. But today's bearish sentiment rejecting this high. Yeah, of course, man. This the dollar sentiment rejecting this high, we would want to see us move lower from there, right? So if we're moving lower on the dollar, that's definitely going to help support a bullish move on gold. So I'm going to be patient, we're going to wait, and we're going to see if gold wants to give us our trade setup. Dollar still moving lower. We could look to see if there's any support on the dollar that we're coming into as well. Now I see this green zone I had marked out. Check this out, right? It was resistance, then it was support. So I see that price really respects this area. It was resistance when we're below it. It was support when we were above it. Resistance when we were below it. And now it looks like we're trying to become support when we're above it. So this is sort of the flip side, right? So yes, the dollar's selling off, but if the dollar finds support somewhere in this area and creates a higher low, that would help gold move back lower, because a strong dollar is a weak gold, and a weak dollar is a strong gold. So I'd keep an eye on the dollar, make sure it does continue its momentum to the downside. I do see gold pulling back right here as well. So it's really just going to be a matter of patience, guys, letting markets play out, possibly using some volume analysis tools as well, but really getting that fundamental overview. And that fundamental overview is still screaming bullish because of that Fed rate decision. You have some technical breakouts on gold too. We've got a lot going on that would really suggest bullish on gold, but what's most important to me, and I might not even take this pullback entry on gold, I might be more patient and let the 4-hour close, because if I'm waiting for gold to close bullish on the 4-hour around 41.40 and I get long around 41.30, but we continue lower to 41.20 and the 4-hour doesn't close up here, well then I'm premature in my trade and I'm jumping the gun on my analysis, because my analysis for a bullish gold bias at this moment is the 4-hour close, and I don't get that for another 50 minutes. Buy limit at 41.35. Yeah, 41.35 looks all right. That's that low volume area. We even had, remember on the 5-minute, we had this volume imbalance area too. And that's off 41.30 to about 41.27. Another key area to watch on gold for support, but we'd really need to see support fast. And the reason I say we want to find support fast is because we only have 50 minutes left in the hourly time frame. If we start failing and breaking lower, and let's say we're breaking lower, and we only have 30 minutes left, well then we're sort of running out of time for the market to make that move back higher. So we've got some trade setups, we're being prepared, we're being patient, and we're also waiting for the NASDAQ. Look, NASDAQ is getting ready to break that level. That's why I'm glad I didn't take that long trade off of pre-market. So we have an NQ short we're waiting for, even though Fed did switch more bullish. I'm considering shorts just to trade the range, or at least trade us back to the 24,800 on NQ, because again, a lot of people are going to be chasing longs today, unaware or not even thinking that Thanksgiving is in a few days and we're going to have very low volume. So guys, if you're ready for the trading day, hit that like and subscribe button. We're going to be wrapping up market in the morning in just a moment. So any questions, please let me know. I hope you guys are ready to make some money today. I know I am. And of course, background music too loud now? All right, we'll turn it off for now. Ladies and gentlemen, have a fantastic rest of your day. Hit that like and subscribe. I appreciate you all for tuning in today. And of course, follow us on social media and join me for Market in the Morning every Tuesday and Thursday, usually featuring Nawab or Jeev, some of the best fundamental and analysts that I know personally, and of course, the co-founders of this awesome platform, Market AI. Guys, have a great rest of your day. Keep an eye on those headlines and don't overtrade. We've got Thanksgiving in a couple days. Take care, everybody. Peace.